Hello, welcome all to this webinar presented by Kalibrate in collaboration with ProStore Consulting. Today I'm joined by my colleague Elizabeth, Director of Customer Success at Kalibrate, Alfred, Key Account Manager for the EMEA region at Kalibrate, and Nico, CEO of ProStore Consulting. Together we'll be exploring the significant growth taking place in fuel retail markets across the Middle East and North Africa region. And within that, we recognise that the region is not homogeneous. Each of the market shifts and growth characteristics are different. So during today's discussion, we're going to hear about some of the challenges in a few countries within the region and how the right set of data and analytical tools can help fuel retailers access quality, scale and growth in their networks by making the smartest possible investment decisions for the future. So we're going to start with a look at the Kingdom of Saudi Arabia, and I'm going to bring Nico in now to get us kicked off. So Nico, can you perhaps start us off by summarising for us the context, changes and challenges facing fuel retailers in this particular market?
Sure. Hi, first of all, and thank you for having me here. And definitely it's a lot of people saying, Middle East or MENA region as a whole thing. It's very different inside if you break it down into pieces. So Saudi Arabia in particular, if you think of this market, is quite different to its neighbors when it comes to fuel and convenience retailing. It's been historically deregulated in terms of the number of players, a lot of independence. The operators might run up to just one single site or a few sites, and there are also big networks as well. And there are a lot of changes, both from the corporate element of it, but also from the demographics in the country. So for those who don't know, Saudi Arabia is a very young country. 70% of the population is younger than 35 years old. It's very young, very digitally savvy kingdom. At the same time, if you think of the demography of the drivers, it's also changing. So there's a big influx of female drivers into the onto the streets, onto the roads. So that's changing as well. And then if you think from the corporate side of things, from the authorities and regulation, the industry is pushed towards consolidation. So instead of having hundreds or thousands of small independent players, it is seen that in a few years' time, 10 years' time, the industry will arrive in a place where it's maybe a dozen or 10 big players, really accumulated and structured players. And there's a lot of requirements that's being set by authorities to maintain the healthy margins or increased margins you need to stick to. And that means a lot of investment, both from acquiring new locations or existing sites or new plots, or into investing or reinvesting in your existing assets. So basically everyone in the Saudi Arabia, if you're a petrol station player, if you want to stay a petrol station player in Saudi Arabia, you need to invest, right? So you need to spend capex, you need to grow. That's the story. So I guess that's just the kind of a context of the market.
Yeah, really useful. Thanks for that, Nico. And Alfred, how would you see the challenges from the Kalibrate side?
Thank you very much, Simon. I'm Alfred Moshi, and I'm the Key Account Manager at Kalibrate for the MENA region, as Simon introduced. Thank you very much, also, Nico, for your presentation. Just quickly giving us a summary about the market in Saudi Arabia. Coming back to your question, Simon, about the challenges. The main challenges that I do see in Saudi Arabia for fuel retailers is actually finding the right locations for acquisition opportunities. So you've got all of these companies who are having, as Nico said, it's not a big place, but you've got all of these companies looking and fighting for the share of the cake. And that is, it's always a challenge for retailers just to ensure that according to their company policies and company plans, what is the right locations for them. And with these locations, do bring back to what they invested. Are they going to target the people that they want to target? So that is the number one biggest challenges for retailers there in Saudi Arabia, to understand the location and understand where is the right place to do the acquisition for new sites. Yeah.
Very good, thank you. And One of the things we wanted to bring to this session was, I suppose, some practical applications of how the Kalibrate solutions can help fuel retailers tackle that. So, Elizabeth, perhaps you can talk us through the approaches that we offer to support solving the problem that Alfred described in the context of the Saudi Arabian market.
Yeah, absolutely. So, I'm just going to share just some ways in which we as Kalibrate can help, and the kind of things that retailers really need to be thinking about to kind of address those specific challenges. So one of the things that we help our clients with is to be able to identify acquisitions with potential and move away from portfolios with weak locations. So we all know when you buy acquisitions, whether you're picking up single site operators or small chains, the quality can be very variable. And obviously, if you're looking to grow a network for the future, what you want to do is you want to really target those brands or single site operators that have strong locations, even if the facilities currently maybe are underinvested, but with strong locations that have a long future potential. So one of the approaches we have, and I've just shown it here, is what we call the performance potential quadrant. So what we do is we overlay two different metrics over each other. So we have the performance of the station, so what they're selling today. That gives you one lens. You can look at it. It's obviously a high performing station. You could think, well, if it's doing well today, it'll do well tomorrow. But actually, there's a really significant other lens that's really important to take into consideration, and that's kind of the potential. So what's the potential linked to its existing location? So that gives you a better idea as to whether that site is going to have kind of the longevity. Does it stand on its own 2 feet in terms of its potential? And obviously, what we can see here, so we've been able to create this quadrant, and these are all individual brands, right? So these are all the individual brands that are available, possibly to acquire within a region. And you can see here, so everything that's on this side here, these are brands that have above average location. Okay, so these are all brands that globally have a portfolio that is, or individual sites it could be, that are well positioned from a potential perspective. And these are sites where the potential is performing, the potential is not as high. And then equally, everything above here is showing sites that are performing really well. So if you look at these groups of sites or networks, these are sites that have high potential and are currently achieving really, really well. So these would be sites that would add direct value to your portfolio straight away. Down here, we've got sites that maybe not performing quite so well, right? Maybe they've had a lack of investment. Maybe there's not, it's not been quite there yet, but they have strong potential in terms of the actual locations. So these are sites that are longer term going to add value to your portfolio when you be able to invest in them properly, put your brands on, put your concepts on, etc. And then actually, if we look down here, and this is where the vast majority of them are sitting, and that's not unusual in sites where you've got often little small operators and that's kind of built where they can. These are all locations that are sitting in poor locations. So really, these are ones acquisitions you might want to think twice about, because yes, they will allow you to grow, they allow you to scale, but actually you're going to end up with lots of sites in the future that potentially you're going to start wanting getting rid of over time because they really don't fit your optimal investment strategy. Then the other thing that we can look at is obviously, that gives you an overall view. Where should I be targeting? But then what you want to understand is, okay, within that, where are my opportunities? And that's where our seven elements framework comes in really, really helpful. So we have 7 elements. You can see them down here. Basically, we managed to break down the performance of a station and understand really how well it performs across these 7 drawers that consumers consider when they choose essentially which fuel station to visit. And actually what we see is that we can actually assess the strengths and weaknesses of each of the brands and each of the sites across that 7 element framework and understand, okay, if a site's underperforming, where is it underperforming? Okay, is it the brand? Is it the facility? Is it the merchandising? And again, that's going to give you a perspective as to what investments will be required to bring a potentially underperforming location or an underperforming portfolio up to the standard where you would want it to be. And we can do that either the brand level. So you can see here, we've been able to assess brand A, brand B, brand C. So you can see brand A is perfect. Brand A really, really performs really, really well on each of those elements. Here we can see there's a bit of a drop off here. So that gives us an opportunity where we consider, and actually these tend to perform quite poorly. So again, these are maybe acquisitions we would steer away from. And we've got this also from on a brand by brand, on a site by site basis, so we can analyze the strengths and weaknesses of each site. Another thing that we can look at is obviously if you've got a geospatial tool like Kalibrate, for example, here we have all the stations in a specific area, and I have just filtered that by a specific brand. So say a brand was looking to acquire, what you also want to do is see, well, once you've acquired everything, does this fit your strategic development plans, right? Are you going to end up with a lot of overlap? Because really, ideally, you want to fill your white spaces rather than just considering buying lots of stations that are sitting right next to your existing network. So again, those kind of visual, that kind of visual approach can basically see, okay, how does this overlap? And then using our forecast predictive tools, we could actually then say, okay, if I was to go do this, how would this then allow me to, what kind of volume would I be expecting to get of these stations? How would this change my market share? How would this allow me to evolve my position within the market?
That's really, really helpful summary, Elizabeth, of a couple of analytical capabilities that we've got there. Just maybe before we move on, conscious that some of the audience might not be so familiar with our 7 elements framework. Do you think perhaps you could give a quick explanation of that for the benefit of the audience?
Yeah, absolutely. So I'll just come back to a previous screen and I'll just talk you through that. So what we have is with our Kalibrate planning solution, what we have the ability to do is really as part of the approach is we can actually really break down, because we capture so much data on every single station, every single competitor. So we can really dig down and say, okay, what are the factors that are driving performance at any individual location? So we have 7 different factors. So location, we know, fundamental, right? Where you put your sites can have a fundamental effect on how well your site performs. The market. So what is your what is that competitive environment like? Are you the only show in town, or are you basically competing against, multiple other competitors? How is your brand perceived in the market by your customers, right? Because some brands are very attractive to certain customers or certain demographics, whereas some others maybe less so. So again, what is that brand perception in the market, and how attractive is it to consumers? Facilities, what are the facilities that you offer? How does it compare to your competition? So again, if I was to look at a particular location, what does it have on the site? Does it have, what's the layout? Is it easy to get on? Is it easy to get off? Does it have a store? What size is it? What's the size of the plot? How many fuel positions do I have? So basically, how likely am I to queue? Those are all things that really matter when it comes to consumers to choose a location. And those are things, again, that we can measure, and then our model can analyze and say, okay, all of these individual locations, how do they perform against each other in terms of those actual elements? Merchandising, so that's the offer on the station. So that could be things like, what offer do you have in your store? What's your coffee offer like? What are your opening hours like? Price, so that affects essentially for deregulated markets where you have a differentiated fuel price offer. And then operations, fundamental. We all know that the way a store is operated can have a fundamental effect on the attractivity to consumers, right? Because customers, they want good customer service. They want the site to be clean. They want the pumps to be operational. They want the store to be well stocked. All of those things, operational excellence, makes such a difference to the perception of an individual store to a consumer. So really, by understanding your performance, your competitors' performance, potential acquisition targets performance, and all of those elements, you can really understand, okay, why are there areas of underperformance, and what investment will be required to get them there, particularly important when you're looking at acquisitions.
Very good, yeah. And I think, coming back to Nico's point as well about the characteristics of growth in the Kingdom of Saudi Arabia are that there's going to be this transition from fragmentation to consolidation. There's going to be an impetus to do that over a relatively short period of time, which will require a lot of sizable capex decisions to be made in a relatively short period of time, and scale for the sake of scale in any market, not just this one, is not always the best way to go. And I think this is an illustration of how our analytical solutions will really help few retailers be more focused on the locations that are going to offer them the greatest upside and allow them to be the most competitive in the long term as well. So,
and we have seen that so many. I will just say, sorry, we have seen that so many times in the past with clients I work with, where basically they've tried to grow very quickly by hoovering up lots of small networks, and they've ended up with a very disparate network where the quality is very variable, and it's taken them years, if not decades, to kind of get that network to where it needs to be, and they've actually ended up having to get rid of a whole lot of sites that they'd initially acquired because they just weren't a good fit for what they were trying to do. So it is really worth investing the time and the effort to make sure that what you pick up is really what you want, and it's going to allow you to really project that image and that perception of value and brand that you want to do in the longer term.
Absolutely.
That's actually a good point. If you kind of taking over the whole network, a mini network or whatever in the region, you might need to take that because it's a deal, it's a package, right? But then if you know what's inside, if you know what you're taking, then you can negotiate the offer, right? So if you know for sure that out of the 100 stations or out of 10 stations, 2 is really low performing ones, then you can split the price, decrease the price. So that's quite powerful. But I want to also to mention that if you look at the different locations, again in the context of Saudi Arabia in particular, if you're a petrol station operator and you're opening a new location, there are certain rules and regulations in place, and it's constantly changing and evolving, that you must have certain things, right? So you must have a convenience store, you must have a coffee shop, you must have certain facilities like prayer rooms and so on and on, right? So if you're acquiring a new location, and if you know for sure that this is a location that is promising, let's say for a coffee, you know that it's worth investing, right? If it's not promising, if no one is really there that will consume the coffee offer or C-store offer, but you still know that you must build those offers, maybe there's no point in taking this site, right? So I think being smart in terms of what you investing in and why you're investing in, that's quite powerful.
Yeah, really insightful feedback that, I think, Nico. Okay, so we're going to head east a little bit now and turn our attention away from KSA to the UAE. So similar to previously, Nico, it'd be great to get your summarized view on how different, I suppose, compared to what we just spoke about with Saudi Arabia, the UAE is from a fuel retail perspective.
Sure. UAE for sure is a different market. It's my home market as well. I'm sitting here in Abu Dhabi today. It's a different market in the way that, first of all, there's less players, 3 companies only. It's way more kind of regulated in that sense. So government has way more say in what's going on. The fuel pricing is regulated the same as in Saudi Arabia. However, margins are a bit bigger in the UAE versus Saudi. So it's a good fuel margin there. Another element in terms of the demographics, I think it's worth mentioning that it's a very diverse market from the kind of population point of view. I think officially it's something like 157 different nations living here in the UAE. In reality, it may be even more than that. So you need to cater your offer for a very diverse kind of set of backgrounds. And then when it comes to the network growth and network expansion here in the UAE, it's an interesting dilemma that is happening here. Because if you think of the market in terms of number of petrol stations in the market, I would say that the market is underserved because you have relatively low number of petrol stations versus the population. I think something like 12,000 people per each station, which is 6 times higher than anywhere in Europe. So it's really underserved market. You can get more stations in. However, if you think of the capex investment and building a new station, if you're a petrol station company running the business here in the UAE, you're so used to your average throughput on a certain level here in the region. It's a very high level if you compare to other places, other markets, but it's something that you normally building your business case on, right? So stepping into an additional location into a new district that's being built, it's a risk because you might dilute your volume. You still need to go there because the competitors will go there, but you ending up diluting the overall volume in your network, right? So and how you then reassess your business case and make sure that everyone is still kind of getting back that investment in whatever's time is needed, that's a tricky thing for those networks in here.
Yeah, I think that is from what I've seen and heard, those expectations of the site throughputs are significant. But coming to you, Alfred, what are the things that you see in terms of how those challenges might be overcome in the region, or in the market, I should say, through using some of the analytical components that we have to offer?
So just going back to what Nico has said, like in discussing the challenges, I was focused on the challenges I definitely see in this market. Number one, Nico spoke about 3 really key issues. Number one was less number of players in the region. Obviously, there are 3 major players in the region, obviously, and the region has a lot of regulations when it comes to retailers in the market. So all of that, so if you put those things together, obviously we are already getting to see there's a picture that there's a challenge for other players and other people in the region. Another thing that Nick has also said that was very interesting was the number of nationalities, people living in the UAE. So this means that there's a lot of people that are coming into the region on a daily basis. So this is going to lead to high demand. So when there's a lot of people coming in from different places of the world, moving to the UAE, moving to live there, obviously there's already a challenge. There's already not enough number of petrol stations serving the current population, and now they've got all these expats that everybody are moving in. So that's another challenge that's coming around in the UAE. So basing on that, we have got a high demand where we've got a lot of people who need volumes, who need fuel, and obviously there's not enough retail stations to provide this volume to the people. Also, we have a growing population. So with growing population, obviously the region will obviously grow in different parts of the area. So right now that will also come with the landscape. So there's going to be a change of landscape in the future. So that is also when there's always a change in landscape, it's always uncertainty, and obviously retailers would never want to be in that position where they're not sure on how the future will be. So that's another concern with retailers in the UAE, whether I can just I'm thinking about it over here. But another thing is, the good side to it is when there is also a change in landscape and there's a lot of people coming in. This also brings new opportunity to the region. So it means obviously these three major players obviously get to understand, okay, there's demand in this other location. Should I build a site there? How should I build a site? It's going to be profitable for me. So there's obviously a good uptake and a good opportunity for retailers there. It's just for them to have the perfect way on how to do it, and the perfect way or on what we say using our scientific methodologies to ensure that they get the best place for them to invest in there. I believe Elizabeth, she can add on here with the data set that we have internally, and to see how we can help retailers understand when retailers facing this kind of situations like hard demand. You've got a lot of queues on retail sites. At the same time, you're scared if a competitor builds next to you, maybe they're going to use their current volume that Nico has been saying that they've got this margin, it's a fixed margin, and they're really used to this kind of margin. How does this impact their network? And obviously, how are they able to grow to other places where the landscape we're seeing is going in a different direction?
Yeah, thanks, Alfred. So I've identified kind of two of our two key tools, I guess, that can be used to really meet those challenges. So one of the things we talked about is about choosing the right location as maybe competition increases. And, when you're looking for a new location for a site, obviously those best locations, they're going to be becoming even ever harder to find, and the competition for those are going to get ever higher. So what you really want to do is get there first, essentially, right? Make sure that you're the person who hoovers up those locations before everyone else gets there, and you kind of secure them for your own network. So what we've got, for example, one of the tools that we use to help our clients really identify where they should go and get there ahead of the competition is something like hotspot analysis. So exactly what we've done here. And a hotspot analysis can take into consideration things like traffic, demographics, future growth, the competitive context, to really identify, where it is where are those areas of higher potential. So if you can see here in this particular example, we've got these darker purple areas. These are areas that either have limited potential or are already well served by the existing offer. And we can see here, there's an area just around here, this whole area here, with a kind of lighter, kind of pinkish color. That's where that potential is much higher. So really, if you were looking as a real estate team and you were looking to really identify in this particular neighborhood, where is it that I should be looking to grow, that would typically be your number one area. You would send out people and maybe proactively look for land opportunities rather than just waiting and being reactive to people bringing you land, especially if you might not be the first person to whom that land is being offered. So that allows you to have that more proactive approach and kind of get in ahead of the competition. Bearing in mind that as well, if you're looking at in an area of growth, if you don't build there, somebody else will. So really, what you want to do is you really want to make sure that you are building, but building right? Building in the right locations that are going to be long-term assets to your network. So it's very important, I think, to be able to really understand where those areas of potential are and really focus in on those to make sure that you're building in those right locations. Then before we were coming back, we were talking a little bit about kind of the profile of customers and understanding your customer. So there's a couple of things that you can do with regards to understanding your customer. So one of the tools that we have, and I haven't shown this here, but is you can draw around a certain location or analyze different locations, your existing locations, and really get a feel for what are the demographics around that area. What's the age range? What's the what's the lifestyle factors? What are the kind of people who live and shop around your location? And then you can use things like mass mobile data. So that's what I've kind of put up here to really understand, okay, for a particular location, where are people actually coming from? So of course, we always have hypotheses, right, of what a typical trade area around a location looks like. But this allows you to have a really key understanding of where your where your existing customer base comes from. And again, that's really useful if you're going to look from a cannibalization perspective, for example. So if we just take this store as an example, those really thick blue lines, that's where the majority of your customers are coming from. But we can see that actually we've got very light blue lines, especially to the south. So essentially that means that to the south of this location, really, that's not where your existing customers are coming from. So if you were to build a new location, for example, within that southern area, you would be complementing your network, not cannibalizing it, and vice versa. We can see to the east and the west and the north. That's where your customers are kind of coming from today. So putting a new location there could potentially cause cannibalization, or inversely, if this site is particularly busy, right? So you've got more customers, people are queuing off the forecourt, you really need to build another location to kind of take that overflow, then you could actually use that as a kind of a flip side and say, I want to cannibalize this site, right? I want to draw some of my customers away from this location and I want it to be me. I don't want it to be a competitor. So maybe you could actually build purposefully to the north, for example, or the west, and build a secondary location that's going to allow you to kind of split those customers more evenly between your new location, your existing location. And that way, you have satisfied customers. You're not having to queue a long time to get onto your forecourt, and you're retaining 100% of those customers rather than having to lose them to some competition.
Yeah, I think that's really relevant. And I think, as I think about the UAE as well, and it'd be interesting maybe to get your input on this as well, Nico, but you've got a situation where some of the fuel retailers there have started experimenting with slightly smaller format locations, where I would imagine they're accepting a lower throughput on the basis of the style of site and its location. But the other thing that's going on is that they've historically all had a stronghold. So I mentioned in my introduction that the region is not homogeneous, and even in UAE, each emirate is not comparable or similar to the other, where some are monopolies or certainly significant players in one area, but when they step out into other emirates, it's they could work. It could be anywhere in the world almost, because it's not a place that they've really tackled before. So do you think that is something that is a real problem for each of the businesses at the moment, as they start to make forays into other traditionally competitor strongholds, but also then have to defend in their own areas where the other brands are going to come in?
Yeah, exactly. That's exactly what I was thinking when Elizabeth was explaining this tools and these views. Because if you think of, just for the simplicity of it, Dubai and Abu Dhabi, right? You have historically Abu Dhabi as a stronghold, as you described it, for ADNOC, right? And Dubai as a stronghold for ENOC. And now the two companies are going into each other's territories, right? So, and let's say ENOC opened a couple of stations here in Abu Dhabi, and then ADNOC already have a mini network in Dubai as well. So basically, if you're stepping into new territory, if you look at the map, it seems like it's already covered. You have already stations. You have in all major, kind of districts and areas. So you have the stations. Where should I put my station not to lose, customers and volumes and so on, right? So I think that's really helpful, trying to see where people actually, where there's, underserved or overserved kind of mini areas within an area, and then also where people are coming from. Right, so those two parameters, I think that helps when you're entering into a new territory, like let's say ENOC in Abu Dhabi or ADNOC in Dubai. So I think that might be a useful view for their network planning for sure.
Fantastic, very good. Okay, thanks both. We're going to shift focus again now, so we're going to head back west into some of the North African countries. And again, these also exhibit different characteristics and behaviors compared to Saudi Arabia and the UAE that we've already spoken about. So Nico, maybe you just want to give us your viewpoint on your experiences with some of the North African countries.
Sure, absolutely, and I welcome here comments from the team as well, because I know you have extensive experience in that region as well. I think what is different in there, and let's take Egypt as an example, where you have a presence of strong international brands. They're historically in and out. Someone's coming in, someone's coming out. Kind of trading networks back and forth. But I think it's a larger size of the network per brand, and again, it's a way more diverse in terms of the formats and shapes and sizes and so on. If you think of the UAE again, yes, you have different brands, but on average, the size of the plot and size of the station is significant, because you have those plots allocated for petrol stations. So you really can build whatever you want there. In Egypt, from what I observed, you have a combination of, yes, newer sites, bigger plots, but also a lot of historical kind of smaller sites where I'm not even sure if there's a place for C-store or not, right? So, or maybe you want there at this place or not. But then how the consumers are evolving, how their habits are changing, you might want to come back to this location and do something with that location, right? And how to do that, what offer to prioritize. If I want to add a coffee shop or a drive-through QSR, or maybe I want to have a car wash there instead, but you have very limited space on that plot, right? So what to prioritize, that's another challenge. And again, in Egypt, from what I observed, it will be a very practical issue for those networks.
Yeah, I think that's absolutely spot on. Is that we have a variation in North Africa, and that's why I would consider the North African networks to be quite different, really, in nature, to maybe the ones that we see more in the Middle East region. Because you're right, a lot of them are historic. So you've got a real mix of stations that were built, in the 50s, where really small, very, almost sometimes the city is built out around it. So, there's really very limited potential to grow and do something very different on those locations. But then you've also got, obviously, that demographic growth has continued to grow, continue to increase and increase. And there's, new suburbs and sometimes even new cities or towns that are growing. And where obviously now there's a little bit more land and it's a little bit cheaper. So, you can build a bigger location, full featured with a restaurant and a car wash and, auto repair and, a lubricants bay. So, you can get those really full featured, very large plots of land now with, really fantastic stations being built in the North African region. And then, but within the same brand, you also do see those really kind of very small, slightly old, slightly underinvested in sometimes locations. So actually being able to manage both. So, and I always like to talk about portfolios kind of as a funnel. So really when you're looking to kind of increase the quality of your network, you've got your really nice shiny new sites that come in at the top of your funnel. And then really over time, if you want to improve overall the quality of your network, some of those smaller, older stations that really are very limited in potential, they're the ones that kind of fall out the bottom. So either you can invest in them, and I think Nico, your point about, some of those locations, they may not look very nice today, but I mean, their position, their location is generally excellent, right? Because there's loads of people, loads of traffic, they're in fantastic locations that you cannot buy anymore because those locations do not exist. You cannot build new in those locations anymore because there is no space. So, but what do you do with them, right? So it could be, maybe you pivot away from, I don't know, maybe you've got a lubricants bay that's taking up a lot of space and maybe a car wash would be better, or maybe a coffee shop would be better, or maybe, you're right. I think sometimes you have to think a bit creatively about what those smaller locations could be in the future and what could be done to kind of keep pace with the evolving needs of the customers who are becoming, ever more demanding, like we're seeing everywhere. The expectations on fuel retail are not the same as they were 50 years ago, and rightly so.
Great. On that note, Elizabeth, North Africa is one of those very fascinating places for me because there's a lot of things that really happened in North Africa in the retail space. So, lucky enough, at Kalibrate, we're able to do the surveys, so we're able to understand how these areas really do grow after and on an yearly basis. And you can just see before COVID and post COVID how the countries are and how the countries have developed and how the retail space has really grown in North Africa. So you have got places or companies like Nico, you have put it out in the beginning of when you started speaking about North Africa, that you have got clients or retailers who were just basing their business in North Africa, maybe in Egypt, in Morocco, and now also crossing the ocean, moving over to the Middle East. At the same time, we do have these big Middle Eastern companies and other international companies who are moving to Northern Africa, and where the country is in Northern Africa, there's still a lot of demand, but that comes where Elizabeth was also saying, and I know Simon has also putting this out, is like, what is the best offer? So that's one of the biggest challenges most retailers in Northern Africa face. What should I offer clients now? What is my offering? How should I offer this to my clients? Because now we have got a mix. We've got all of these new brands coming up with their new offers, and with the must-have, maybe they must have a quick shop, they must have a coffee shop, they must have a lube spade, they must have, and then you've got all those traditional retailers who just had pumps, and now they're in a port thinking, okay, should I also have a convenience store? Should I also have a coffee shop? Should I also have a lube spade? So that is like one of the biggest challenges that we see from clients there, which is also very interesting and fascinating because we can see how the country or Africa as a country is growing, and in the future it will be one of those mega powers. So we really do like working with clients to understand, for them to help them optimize their network, and I believe Elizabeth can talk more about optimization and how we do help clients in North Africa on that.
Yeah, so I'm just gonna share a couple of visualizations just to talk through a little bit about the kind of things that we can do and how we help. Kind of coming back to that same theme. So talking about that portfolio. So we are talking about locations, talking about your existing portfolio and understanding really where those opportunities are. And I showed this before when we're talking about acquisition opportunities, but obviously it's very, very relevant to have that visualization of your opportunities versus, sites that maybe don't have that, that same space to grow. On a network basis, right? So looking at site by site. So this is an existing network. And essentially, you can see here, all these green dots. These are stations in great locations performing really well. Perfect. All of these red locations, right? These are sites that are in great locations. They're not performing very well, right? So these might be typically, the ones we're talking about, right? So maybe these really small plots in really densely populated cities that have a lot going for them from a location perspective, but at the moment the offer is pretty limited. So that's typically, when you have capex, and it's important if you're from a network optimization, your capex has got to be split between, your shiny new sites, which is very important, but also, maximizing the value of the locations you already have. So again, all those red dots are really opportunities for you to kind of go, okay, what could we do if I was going to spend, if I have, capital expenditure to spend, what am I going to do with these locations? Should I put in a car wash on? Should I put in a, coffee? What can I do in these kind of rather small locations to make this site more attractive and to meet the changing needs of, and like I say, an evolving customer who wants different things than maybe it did previously. And then equally, you can see we've got these grey dots. So these are poor performing sites, but also in poor locations. So that's where that lens is really important, right? Because those reds and those grey sites, they look the same, right? From a turnover perspective or from a sales perspective, right? They are doing the same, but one has potential and the other one does not. So those ones, if you're looking at things like freeing up capex or freeing up OPEX, or getting some capex typically from maybe those sites should be sold for alternative use, right? Can you free up some capital expenditure from the sale of some of those locations that longer term don't have much of a future, and then you can reinvest that money into those sites that really have potential. So from a capital optimization perspective, from a network optimization perspective, these are really interesting views that are going to really help you understand and work out where to invest. And then we can, dig in a little bit deeper and understand how to invest. And, one of the things I wanted to talk about is, it's really important when you're looking to invest in an area, or you're looking to, this is, for example, maybe you want to grow in a particular location, right? There's a new suburb that's up and coming, and you want to look and grow, or you want to think about what your offer should look like. It's really interesting to actually do a benchmarking exercise against your competition, right? Or your existing locations, right? To understand in a particular area, well, what is there, right? What are the alternatives that your potential customers have? So here we have, a really neat little tool where you can basically drop a pin anywhere on a map, and then you can start looking at, okay, what sites are there, and what do they have, right? How many pumps do they have? What their opening hours are? Do they have a shop? If they do have a shop, what size is it? Do they have parking spaces? What's the typical traffic count outside the door? That's going to give you an idea of, what you're competing up against. So when you have a potential plot of land where you want to see, well, if, and these are just made up examples, but if, typically in your area, everyone has a shop and everyone has a shop that's 100 square meters. Well, if you get offered a plot of land where you could only put a 40 square meter shop on it, well, to be perfectly honest, it's probably not going to cut it, because, you're going to be competing against an offer that's far superior to what you can do with the location that you're being given. So again, when we're constantly thinking of different ways you can utilize the data, get insights, understand, where you should build, in terms of your existing locations, what you should be doing with them. And then we talk about exactly, very granular level, number of pumps. Should you put a store on? If so, what kind of size? Should you, how many parking spaces do you need? All of that information is stuff that we can help you with. And then again, with our very powerful forecasting tool, is we can actually say, okay, once you've decided what you want to build, where you want to build it, we can actually then give you a number. So we can then say, you know what, you do this, you put that on there, this is what it's going to do, this is your turnover for your store, this is what your QSR is going to do, and these are what your liters you're going to sell. So that package is, really the A to Z of real estate. Really is understanding where, understanding what, and then getting that number.
Yeah, that's great, Elizabeth. I think the thing that's really stands out for me was on the quadrant that you shared, exactly like you said. The dots that are grey and red all appear the same if you're only looking at it through their current performance. And I know I'm sure it's the same for you and probably you as well, Nico, lots of examples of where our clients have invested in the grey dots to try and improve the performance without really understanding that there was a constraint to any incremental performance, and at that stage the capex is simply wasted. So again, it's a great visualization that then leads straight into very practical actions that clients can take within the fuel retail segment. Okay, so I'm just conscious of time, and I think we've sort of completed the main body of the discussion that we wanted to have there. Nico, maybe if I'll come to you, have you got any kind of closing remarks or summing up comments that you'd like to share with us?
Just very quickly, I just wanted to kind of feedback on the latest piece of the tool that we saw. Just another application that potentially could be useful for the petrol station guys is the alliances, right? Because real estate deals and branded partners is an important element of the portfolio in the Middle East and North Africa. So looking at the site potential is an interesting way to structure those deals with the, let's say, McDonald's or KFCs and so on, because any fuel operator would love to have McDonald's in every single site. That's not going to happen. What we don't want to do is to have, let's say, a gray dot underperforming low potential site and trying to improve that site by building or offering that, McDonald's or KFC there. What we really want to do is to find a site that has the potential and offer that to McDonald's and KFC. And another thought that I had is that actually what would be really useful is when you sit down with your KFC to negotiate, before going to the site and see the physical constraints of the actual plot and the size of the box and so on, to see the potential first, to discuss where is the potential for both, let's say, fuel traffic and fast food traffic, to identify those sites first and foremost. And then you go and see, maybe you can be creative, maybe you can swap and trade some of the old car wash box, you can come up with the drive-through KFC and so on, right? So it's important to understand potential first before looking into the kind of physicalities of the specific plot. So and then kind of wrapping that up from my point of view, there's a lot of things that's happening in the region. Again, as we started with, the region's very diverse. Every player has their own agenda, their own kind of objective and their own constraints. Someone's growing only locally, some growing regionally and internationally. So there's always some kind of capex involved. There's always some growth involved. And then where capex, you have optimization, you have opportunities for growth, you have opportunities for kind of prioritization. So I think all the tools that you showed today kind of all go down that route very nicely. And then it's a matter of kind of pick and choose what's the priority, what you want to focus on. But yeah, definitely there are a lot of things to look into.
Fantastic, and yeah, I appreciate that feedback, and interestingly, the piece that you mentioned there on alliances as well. That's more and more. It's going to have more and more impact, right, about making the right choices on that side of things as well. So a really good call out there too. Very good. Okay, so that brings us to the end of what I felt was a really insightful discussion today, actually. So I'd like to thank Elizabeth, Alfred, and Nico for their contributions to today's webinar. And I suppose from my perspective, a few key takeaways from this discussion. Importantly, that as Nico said, the region is diverse, but within that, I think the need for a mature, comprehensive, and intelligent tool that can support the ability to make quick, confident decisions that deliver smart, successful investment choices. It's very much the conditions are right for that there at the moment. And again, from my perspective, the timing is really now to get the right solution in place to support that, because competition in the region will continue to grow, and that will be competition for the best locations. It'll be competition for the best new innovations, alliance partners, format developments, and so forth. So there'll continue to be a fast-paced evolution to the growth that we're seeing there. And then finally, just wanted to mention that we're going to be attending the Refuel Forum MENA at the Grand Hyatt in Dubai next week on the 26th and 27th of February. So hopefully we'll get to meet some of today's audience there at the event as well. Thank you very much, everybody, for your participation today and in the audience as well. We look forward to seeing you again on the next instalment. Thank you. Bye-bye.
Thank you.
Thank you, everyone.